Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 9th, 2024, and we're diving into Rent the Runway's third quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, Rent the Runway has been making waves in the fashion industry with its innovative closet in the cloud concept. What can you tell us about their latest earnings report?
Thanks for having me. Rent the Runway has indeed been a disruptor in the fashion space. Their Q3 2024 earnings report highlights a return to subscriber growth and improved business momentum, particularly in their reserve and resale offerings. They've also achieved record low cash consumption for the 9 months ending October 31st, 2024, and reiterated their expectation for free cash flow break-even by the end of the fiscal year.
Revenue and profitability overview. Let's start with the top line. Rent the Runway reported a revenue of $75.9 million for Q3 2024, which is a 4.7% increase year over year. John, how does this growth reflect on their overall business strategy?
It's a positive sign, especially considering the competitive nature of the fashion industry. The growth is largely driven by their reserve orders, which saw the fastest year-over-year growth since Q1 2022. This indicates that their focus on operational improvements and increasing the availability of high-demand styles is paying off.
Despite the revenue growth, the company reported a net loss of $18.9 million. How should investors interpret this?
While the net loss is significant, it's an improvement from the $31.5 million loss in the same quarter last year. The reduction in net loss as a percentage of revenue from 43.4% to 24.9% shows that Rent the Runway is managing its costs more effectively. Additionally, their adjusted EBITDA improved to $9.3 million, up from $3.5 million, reflecting better operational efficiency.
Subscriber metrics and strategic initiatives. Subscriber growth is crucial for Rent the Runway's business model. They reported 132,518 ending active subscribers, a slight increase from last year. What are they doing to drive this growth?
They've introduced a new one-shipment subscription plan at $119 per month, which provides access to their full subscription closet. This is a strategic move to attract more customers by offering flexibility and value. Additionally, their improved SEO has led to new highs in keyword rankings, boosting non-branded traffic and potentially attracting new subscribers.
It seems like they're also focusing on brand awareness. Can you tell us more about their recent campaigns?
Absolutely. Rent the Runway launched the Own Nothing, Have Everything campaign, celebrating their 15th anniversary. This campaign features real customer stories, which helps in building a strong emotional connection with their audience. They've also partnered with the Dallas Cowboy cheerleaders to showcase the versatility of their offerings, further enhancing brand visibility.
Financial outlook and future prospects. Looking ahead, Rent the Runway has provided some guidance for the next quarter and the full fiscal year. What are the key points investors should note?
For Q4, they're expecting revenue between $74.4 million and $80.3 million, with an adjusted EBITDA of $16.1 million to $20.1 million. For the full fiscal year, they anticipate revenue growth of 2 to 4% and an adjusted EBITDA margin of 15 to 16%. Importantly, they are on track to achieve free cash flow break-even, which is a significant milestone for the company.
How does this outlook position Rent the Runway for the future?
Their focus on subscriber growth, cost management, and strategic partnerships positions them well for continued growth. CEO Jennifer Hyman has expressed confidence in their ability to accelerate growth across all revenue lines in 2025, which is promising for long-term investors.
EPS forecast and analyst expectations. John, let's talk about the earnings per share. Analysts had forecasted an EPS of $4.96, but Rent the Runway reported an EPS of $4.94. How significant is this beat?
While the difference might seem small, Beating the forecasted EPS is always a positive indicator. It suggests that the company is managing its financials slightly better than expected, which can boost investor confidence. With only one analyst covering the stock, it also highlights the niche interest in Rent the Runway's financial performance.
Does this EPS beat change the overall sentiment towards the stock?
It certainly adds a positive note to the overall sentiment. Combined with their strategic initiatives and improved financial metrics, it could lead to a more favorable outlook from investors and potentially attract more analyst coverage in the future.
Key takeaways. As we wrap up, Rent the Runway's Q3 2024 earnings report shows a company on the path to recovery and growth. With a revenue of $75.9 million, a reduced net loss, and improved adjusted EBITDA, they are making significant strides towards financial stability. John, any final thoughts on their investment prospects?
Rent the Runway is positioning itself well for future growth with strategic initiatives and a focus on subscriber engagement. Their path to free cash flow break-even is a critical milestone, and if they continue on this trajectory, they could become a more attractive investment opportunity.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Rent the Runway's performance in the comments below. Until next time,